I'm Ian, and this is the market roundup for the 24th of Feb 2021. It was a mixed picture for London opening, following on from a disappointing day in Asia. Hong Kong provided the main news, falling 3%, on news that stamp duty on shares was to increase from 0.1% to 0.13%. Investors in the US, Japan, and most other major indexes will not be used to stamp duty, but here in the UK, shares already incur a 0.5% fee. That's a fee on the value of your initial investment, by the way, irrespective of whether you make a profit on it or not. A stamp duty charge has also been proposed by Democrats in America, but has so far gained little attention. The Shanghai Composite was down 2%, the Nikkei down 1.7%, and the ASX down almost 1%. The Nikkei has fallen back below its 30,000 level, reached last week for the first time in 3 decades. As the day wore on, though, the London indexes fluctuated with positive to negative, but were eventually able to hold on to their gains, the FTSE 100 finishing up 0.5% and the FTSE 250 up 1.2%. Travel companies continue to do well following publication of a roadmap out of the COVID lockdown. TUI was up 12%, Carnival up 10%, whilst IAG Group and EasyJet were up 4% and 5% respectively. Rolls-Royce, which has been down almost 90% over the last 2 years, shows signs of life and rose over 5% on the day, in part due to its aircraft engines being in use again once air travel resumes properly, but also following promising news on its nuclear and space focuses. It was the second best performing stock on the FTSE 100, behind only BP, up 5.5% on the back of the price of oil increasing, predictably. Less predictable was a stonking set of results from Lloyds Banking Group. Although earnings fell, as expected, it was much less than feared, backed up by great mortgage numbers and a reduction in debt provisions, and means they arguably produced the best results of any of the big UK banks. The share price was rewarded, rising above 40p for the first time since last year's COVID-induced drop, before giving back some of its gains. Dividend was also reinstated at 2.28p per annum, yielding 5.8% at closing prices. I even felt there could have been scope for a large dividend and had hoped for north of 2.5p, having been bullish on them ever since their Q3 results showed similar. Still, as a mid-sized holding in my portfolio, my only UK bank, I'll take it. This will be the last set of results delivered by CEO Antonio Horta Osorio, who has presided over Lloyds for just over a decade and was brought in after a £20 billion bailout by the government in 2008. Personally, I think he's done a great job, so a bit sad to see him go. Exporters are under pressure, though, primarily caused by sterling showing no signs of slowing down as it continues its surge this year. Unilever continues to struggle following lackluster results in early Feb and wasn't helped here, falling a further 2%, and is threatening lows not seen for 3 years. A good entry point or a value trap? I did recently open a position and may consider adding to it, but there's a risk of it not going very far and slowly. On the FTSE 250, yesterday's biggest gainer was today's biggest faller, as the market realised they might have got a bit excited by SSP Group. It was down 7%. This made me feel better about missing that opportunity, especially as my WH Smith continues to surge, up another 3% on the day. Speaking of the pound, there continues to be debate about how far it will go. It flirted with $1.42 today before falling back. $1.43 represents a 3-year high, $1.46 a 5-year high. I'm no currency expert, but having seen over £1,000 wiped off my paper profits in US stocks, I've taken a great interest in it. The pound has been benefiting from being ahead of its peers with vaccines and an EU trade deal that alleviated some short-term fears. But genuine questions remain about how strong the UK economy will rebound and how successful it will be pivoting away from the EU in the longer term. Going to the US, and it was a return to the meme stock topping every chart Game Group, who saw a share price more than double in the day. That's either people getting very rich or going very broke. I'm enjoying watching it all happen from a safe distance. There was also some cheer as Johnson & Johnson's single-dose COVID vaccine was approved by the FDA. J&J has been on a bit of a slide recently, but saw a rebound to finish up about 1.5%. But that feel-good emanated through the rest of the markets and saw the US markets rise. Notable was the Dow Jones, which rose 1.4% to finish at record levels. The NASDAQ also rose 1%, despite some ongoing concerns that the tech sector might be overvalued, whilst the S&P 500 managed a 1.1% rise. Speaking of the tech sector, some major stocks found a supportive floor as investors rushed in to pick up perceived bargains. Microsoft, Broadcom and Alphabet all saw rises, but Amazon, Apple and Facebook remain unloved, seeing additional falls. I'm personally praying for a $230 price for Microsoft and a $450 price for Broadcom, though that might be wishful thinking. Wrapping up with crypto then, another something I enjoy watching from the side. It started the day at 48.9k and looks set to finish at about 48.7. But before you worry that Bitcoin has got all boring, it managed to climb to almost 51.5k before falling back. And that wraps up today's market roundup. Thank you for watching and good luck with your trades.